Okay, so another big test for Martin Armstrong and his economic confidence model, ECM, where his current ECM showed a turning point on the 18th of January 2020. Today's 29th of January 2020. So he made a very specific call that is almost tradable. If you had a portfolio of stocks, you could adjust it according to this prediction that is made. It's not going to take very long until we know whether it was correct or not. It was a very specific prediction with specific numbers, meaning that once again we can keep him honest in the next few months, and we'll be keeping an eye on what's going on. I have put in a few orders due to it. Again, it's silly to trade according to this, but uh, you'll see what I mean. This is what he said. And by the way, I'm not going to play the video. I'm going to paste the link to this video in the description box. And also, I'm not going to spoil it for you by having this monologue because there's a lot more to it. As mentioned in my previous video, this is one of the videos I showed to another colleague, and he actually didn't read it the same way, or at least didn't pick the same parts that were the most important to me. So let's see what you can pick up from it, what your number one takeaway on it is. Okay, so he said, if the last Friday's closing of the Dow, which is that 24th of January, once again today is 29th of January 2020. So if the last Friday's closing on 24th January is lower than the Friday before, which was just before the turn of his economic confidence model on the 18th of January. So if the 24th of January, right, closing of the Dow is lower than the 17th of January, then we've seen a temporary top. Now, everyone thinks, oh, well, then the crash is ahead of us. No, he didn't say crash. He said a pullback, a correction. This is something that happens normally. How long will it take? He did also say that if it goes, it'll probably just go down a little bit, and maybe if it goes sideways after that, means that the market's very strong, and then it's going to go up even more than it would if it was weak. And this downturn cycle, not a bear market, is any stronger, then yeah, it'll go down steeper. Obviously, if there's a lot of money still on the side to be invested and the market's pretty strong, then this downturn is not going to necessarily look like a downturn, but the market's definitely going to take a breather. And since the last Friday, just very last Friday, actually closed lower than the Friday before, on the 17th January, then his call is that we're going to see a downturn. Once again, not a bear market, just a pullback, a correction, and which may manifest itself in not much of a correction at all, which would mean that the market is strong and it's only going to go up after that. Now, after how long? A month or two or three? I'll keep an eye out on any information on that, any signals that he might give or I might find somewhere. In any case, it's probably not going to be very prolonged. It'll be a breather. It'll be a good buying opportunity. All that means that again, we're not entering a bear market, and hence the title here, the Dow's next major test is at 40,000 level. I think he mentioned that he doesn't see that reaching it before 2022, which is not that far away. So that'll be a big jump, and then he sees something like 60,000 by 2032. So there's no crash that everyone's talking about. As he said, it's one of the most unloved bull markets since the 2009, and many of us, most of us retail investors, mums and dads, have missed out on this last bull market. Unfortunately, I don't want to be the one who misses out on the next one. I also don't want to be the one who piles in all the money and then loses it in the next one. And that has happened in the past to people. Let's remember the dot-com bubble and all that. So, but the important thing that he doesn't talk about it in this interview, however, is that most retail investors, people are actually not invested in the stock market. It means that there's a lot more money that can come out of housing and cash that people have into the stock market once everybody sees that it's pumping pretty much. And that's where you get the snowball effect and everybody jumping in, and that's when you will eventually see a bubble, but you want to ride that bubble. So this is part of it. This is supposedly a good buying opportunity in the next few months. We'll find out when, and we will find out if Martin was correct to predict that the market is not going up anywhere anytime soon, at least in the next couple of months. Again, that's the best I could understand from this interview that he had. I'll post a link down below. What do you think? We will know 1 or 2 or 3 months. We'll know where it's moving.